median home sold prices did dip in quarter four and really kind of the beginning of quarter one. But what has happened to inventory right here in the Treasure Valley area, and what has happened with the buyer's demand? Are we looking and being on pace for what happened in January 2023 in quarter one, which was really kind of unexpected? What could be in store as we start leading into quarter two, quarter three during normal real estate hot season swings? Go ahead and stick around to this video. Let's go ahead and dive into all that, take a look at the data, and see what's happening right here in the Boise real estate markets. I look forward to being your guide. Well, hello and welcome back after that short break, everybody. Mike Petras here with MPRE Residential, powered by NextHome Treasure Valley, and welcome to another episode of Mikey's Monthly Market Updates for January of 2024. Now, of course, if you are new to these series of videos, this is going to go ahead and cover what is happening in the real estate markets right here in the greater Treasure Valley area regarding Ada and Canyon counties. We will be looking at trends according to the data so that you may be able to make the best informed decision before you decide to buy, sell, or invest in real estate right here in the Treasure Valley. But quickly, before we do, please feel free to hit that subscribe button down below. Also, if you feel that this information might be useful for somebody else, please feel free to go ahead and share it to them. And of course, if you have any other further questions, please feel free to reach out to me, give me a call, shoot me a text, send me an email. More than happy to answer any questions that you do have. So let's go ahead and let's dive into it. All right, Ada County, and taking a look at this graph, we can see that the median home sold price has been kind of dipping down. But if you do watch these videos in succession, you do know that I have mentioned that usually about quarter four, quarter one is when we can see median home sold prices kind of come down because it's the holiday season. Not a lot of people want to be out there buying or selling at that point. And of course, it makes it a little bit more competitive for sellers to be able to sell their homes at that point, as there's generally a little bit more inventory than there are buyers' demand. And so it kind of flexes the price a bit. But that is normal swings that we can see during everyday real estate patterns pretty much around the U.S. But as we take a look at what happened in January of 2024, we're sitting at $514,975, which is way down, of course, still for the market correction, which we saw in late May, early June of 2022, and comparatively to what we saw in January of 2022 as a comparison, we are still down overall from those particular numbers. In particular, we're down 4.63% since 2022, 14.49% since that market correction. But if we're taking a look at January of 2023, right there in the yellow, sitting at the 487, 495, Ada County overall took a jump up of 5.33% overall for the year. Pretty big jump. Looking at the overall 6-month breakdown, you can see as the holiday seasons has started to swing through, boom, we see it started going down like 539,990 back in October, 530 when really Thanksgiving holiday was starting to hit, 516 when Christmas was starting to hit, and 514,975 leading into quarter one. So what I do anticipate is as we go down month over month now here in January, leading forward February, March, April, I can almost anticipate that this number is going to start to go up. But why? Well, once we hit the inventory graphs, I'll go ahead and show you that. But from last month, we're just down 0.4%, which really isn't all that much. So why do I say that I feel that home prices are going to be on the way back up in 2024? Well, let's take a look at inventory. Because inventory right there towards the end of the season was starting to kind of gap itself a little bit to the buyer's demand. As the buyer's demand was slipping, inventory was starting to rise. But boom, look at that sharp drop that we saw right there around November, December. In fact, actually December stats, if we take a look at total single family homes sold, we were sitting at 2.27 months worth of inventory overall, which was down 12% since November, the month before. That is a huge drop. And as we can see right there, boom, it is just down now to the pending line. And if we're taking a look at the pending line, which is people under contract, which will sell, it's on the rise again. Buyer's demand is coming back. And what is it doing? It's starting to narrow that gap again. And we're starting to get back to, if we're looking back at January of 2019, that commingling. So could we see some stabilization, or could we possibly start seeing home values starting to rise? Well, my guess is home values starting to rise. And why do I say that? Is because really buyers and sellers right now know that mortgage interest rates, this is going to be the new norm. It's going to sit around the sixes for this year, like it did last year, really, in a lot of aspects. Is it going to come down to the fives and a halves? This year, I highly doubt it. I got a feeling it's going to stay around the sixes, but we're just going to have to continue to monitor and see. But we're starting to see that it's starting to sink into buyers and sellers that this is just now the new norm that we live in. But look at this. Inventory just absolutely died down and the buyer's demand is coming back. A lot of the trend of what we saw back in January 2022, we're taking a look there. You can see the buyer's demand was shooting back up at a little bit more of a fever pitch than we're seeing right now last year, which is incredible. But this is something we're definitely going to have to take a look at. But I'm almost guessing, almost positive that prices will start to be on the rise. So for total single family homes in January of 2024, we are sitting at 2.36 months worth of inventory. So that is up a tick from the big slam that we really kind of saw in December. But let's break it down by existing homes and new construction. Existing homes, bam, way down. In fact, actually between November and December, they had a 21% drop in inventory. Look at that. And again, look at the pending line, the orange line. It is starting on its way up. You can see slowly that the amount of solds is starting to tick down. Okay, but things are starting to commingle themselves, and overall transactions themselves, because of where mortgage interest rates are, a lot of sellers don't want to sell right now. A lot of buyers don't want to buy right now. They want to think, they want to think that things were going to be different, or a crash is going to be coming, or something along those lines. And we can start seeing that stabilization pattern return, but we'll just have to continue to watch and see what happens with the buyers. Are we going to start ticking up in a great degree like we saw in 2023 at the very beginning? We'll go ahead and we'll pay attention to that. Well, how about new construction? Well, taking a look at this, we can see that new construction really didn't dip a whole ton of inventory. It did dip down a bit, but look at the pending line. The pending line absolutely shot up. Okay, now I know a lot of these builders retreated back to pre-solds, so a lot of these pendings could be still waiting for multiple months at a time before they decide to close. But the buyer's demand overall, you can see that it's ticking up because of that line. And a lot of the reasons too is because the builders are still offering concessions. And overall, when it comes to median home sold price, new construction has taken the biggest hit as compared to existing homes throughout 2023. So overall, your better value is going to be in new construction, in negotiation wise, and overall median home sold price. So no kind of surprise there. But look at the levels. If we're looking at where the pending line is, all the way back to January of 2023, when we had that spike, when people were really kind of rushing in, which is really odd for a quarter one of beginning of a year, but it was just amazing. But look at that. We're almost back at that levels. So new construction is one thing to watch too. And of course, the builders do control their inventory. So that is another thing we'll have to watch just to make sure it doesn't go spiraling out of control for some reason and the builders hurt themselves, which I doubt they're going to do. So now let's go ahead and break it down by existing homes and new construction. And let's go ahead and take a look at the median home sold price trends that we've had. And as you can see here, if we're looking at what happened this month for existing homes in Ada County, we're sitting at a median home sold price of $498,500, which is down from the $510 that we saw the month prior, which brings us actually down 2.25% from the previous month. But if we are looking since January of 2022, of course, we know the market correction again hit late May, early June of 2022 itself. But we're sitting at 515,100 back then, sitting at the 498,500. So we're down 3.22% during that mark. There was points during 2023 where it did exceed that mark. But if we are comparing from what happened since the market correction, when it's sitting at 586,750 down to the 498,500, we are still down 15%. But if we're looking at the yellow line again, we had gains in 2023. You can see that existing homes are sitting at 475 back in March of 2023, and we are still up overall 4.71% since that period. How about new construction? Well, if we're looking at the median home sold price, you can see that new construction hit $529,995 for this month, which is down, of course, from the $545,945 that we had the month prior in December, which brings us down actually 2.92% overall. And if we're looking all the way back in January of 2022, we're sitting at $588,945 down to where we're at today. We're down 10%. And of course, the market correction, which in Ada County, which was kind of strange, new construction really kind of held out for another couple months before the median home sold price started tanking its way down, but is still down 23.1% since then. So again, the data is showing you that new construction overall has taken the biggest hits as compared to existing homes since the market correction happened. But if we're looking back at the beginning of 2023, when it was really at the rock bottom at 494,900 up to the 529,995 that we've got today, new construction has gained back 6.62% of the losses that it incurred since the market correction in the lowest point. So it is starting to rebound. And again, looking at the inventory sheets, we can see trends that it might start coming on its way back up. So buyers, keep that in mind. All right, how about days on market? Oh, we're taking a look. Well, they are on the way back up. And that's typical for this time of year, late quarter four, early quarter one. We can see that we're sitting at 50 days on average, to sell a home here in Ada County. Now, are we at that fever pitch that we had, 2 years ago during COVID when everybody wanted to move here and we had no inventory? No, we're not to those levels. Things have more or less kind of mellowed themselves out and more or less kind of stabilized a bit during 2023. In fact, actually, home prices were on the rise in 2023 overall. But as we can see, the competition is there, but just not as a fever pitch. But what we can expect is that once we start getting into quarter two and quarter three, expect the days on market to go down. And say for some reason, if inventory doesn't return and the buyers just say, hey, I'm going to go for it, I'm going to go ahead and refi in 2025, when I know that rates will probably be better, which most likely they will, we can see that number maybe drastically go down and maybe see multiple offer situations return right here to the Treasure Valley. So we'll just have to continue to monitor the data. Now, how about cancels and expireds? Well, this kind of just overall shows the health of what sellers are doing out there. Are they really pulling their listings, off of the market? Are they expiring? Are they just, asking for an exorbitant price and really not getting it? Well, one of the craziest things is looking at the cancels is it went way down. So the transactions, a lot of people seem to be pulling their houses off the market over the last few months. In fact, if anything that this is kind of going ahead and showing is just saying that sellers are reluctant to sell, especially right now and especially during the holiday season. That very, very well could be. And it just kind of the inventory got swallowed up. And if we look at the expireds, we can see that they're kind of ticked up a little bit. So we still do have some sellers out there that just want the price that they want to get, for their particular kind of house that usually results in that condition. But we can see overall that the markets, according to this graph, are looking healthy out here in Ada County. So let's move on to Canyon and let's see what happened over there. And as we can see with Canyon County, really same kind of trends over the last few months, especially during late quarter four and now into quarter one, we see the median home sold price has dipped overall, sitting at $399,990, which is of course down from what we had at the $424,900 in 2022, and since then is down 5.86%. Sorry, I'm jumbling a little bit. And if we're looking at the peak when we hit late May, early June of 2022, when the market correction hit at 476,500, down to where we're at today, Canyon County is actually down 16.05%. Now, Canyon County has some good gains since 2023, but because of the seasonal swings, we can kind of see it tipping down the other direction. But we're still up from that 395, 445 in yellow that we had in January 2023, which puts it overall up 1.13% in Canyon County. Now, a little bit unlike Ada County, we had some more bouncing, over quarter four here in Canyon County, a lot more stabilization than what Ada County did as kind of like a normal holiday seasonal swing. But we still did start kind of ticking down, but kind of staying even. We were at that 415, 495 back in September, then basically at 400, then 398 to 410, bounce back, then down to the 400 again. So stabilization there, but a little bit of a downward tick. And if we're comparing to last month, when we're sitting at the 410 to today, we're sitting down 2.44% since last month. Now, how about the inventory in total single family homes in Canyon? We can see, boom, same pattern over the last couple of months. Bam, you can see that inventory line shot down. And we still see that it's still ticking down a little bit, sitting at 2.43 months worth of inventory overall. But again, take a look at the pending line. The pending line shot up. Even take a look at the sold line. Sold line's shooting back up. So again, we're going to see that intermingling. We might see some stabilization, but remember, even when we didn't have exactly full intermingling in 2023, we still saw median home sold prices on the way up. So again, do I anticipate median home sold prices in Canyon County to continue to go up if sellers are reluctant to sell and buyers are still coming out, regardless of where the mortgage interest rates are? Absolutely, I do. So we'll just have to continue to watch the data, but I can anticipate median home sold prices to be on the rise. Breaking it down by existing homes and new construction, again in the inventory, look at that. Bam! Just right off a cliff with existing homes, all the way down to just 287 active homes for sale, 134 sold last month, which pushes us at 2.14 or 14 months worth of inventory for existing homes in Canyon. But again, look at the pending lines, look at the sold lines. It's starting to bridge that gap as inventory is on the way down. So we'll just have to continue to monitor and see what's going on. As long as it narrows that gap, you can almost guarantee stabilization or even median home sold prices to be on the rise. What about new construction? Again, just like Ada County, not a huge tick down, but Canyon County a little bit more prevalent. And again, below the pending line. Now, there could be still, again, a lot of homes that were pre-solds that still have not built out, hence why the pending line is as high as it is. But again, you can see the pending line is on the way back up. Again, why? Two big factors: concessions that the builders are still handing out, especially during the holiday seasons, because they just want to continue to entice you to come in, which is a good thing if you're buying during the holiday season. But also, there could be a lot of people still out there, waiting on their homes, to be built. Hence why that line is where it's at. But also, the median home sold price has taken the biggest dip in new construction overall as compared to existing homes. So again, more attractive to go out and buy a new home in Canyon County, just like it is in Ada. But again, we're sitting at 2.68 months worth of inventory, which is actually down from last month. In fact, all three categories, total single family homes, existing homes, and new construction, do make up total single family. But either way, all three are down in Canyon County, which again, that is going to make a factor, especially if the buyers start returning, which is what it's looking like according to these graphs. Now, what about median home sold price? Let's go ahead and let's start off with existing homes itself. We can see that actually the median home sold price took a jump up in existing homes in Canyon County, sitting at 385 from the 371, 495 that they had the month before, which is actually up 3.5% since then. And if we're taking a look at from the 390 that we had in 2022, we're only down 1.28% in existing homes since that mark. Now, of course, we haven't hit the market correction yet. It's probably going to take some more time before that happens of upward growth when we're sitting at the 425. So we're still down 9.41% overall since then. But if we're looking at what happened in January of 2023, when it was sitting at 339, it actually made the biggest gains. That was the biggest gains kind of overall here in the Treasure Valley, was in existing homes in Canyon County, which is up 11.94% since that 339 to the 385 that we have today. And rounding out again, taking a look at new construction, looking at the median home sold price, again, better value that you're going to have overall in new construction. Just like in Ada County, we can see that the median home sold price came down. Do I expect it to go the other direction? I do. Okay, so we'll just have to continue to monitor that data and see how much gains we get in 2024. But we were sitting last month at 429.50, down to the 404.990 that we've got this month. So that actually dipped 5.6% overall and actually dipped below the 2023 thresholds and gains that they had really kind of over 2023. So we're actually down since that mark, just 0.25%, so not a whole ton. But if we're looking from the market correction, 549, late May, early June 2022 to what we're sitting at today, down a whole whopping 26.23%. So again, your better value is going to be in new construction overall as compared to existing homes, plus concessions are still out there for now. But looking at the 465, still down 12.90% since January of 2022. So we'll just have to continue to watch what happens with new construction, especially since they can control their own inventory. We'll just see how this one works out. Now, how about days on market? This one was a little bit of a surprise. You can see that days on market actually dipped a little bit, down to 46 days from the 52 that they had in December, the month prior. That's kind of a little interesting. So showing maybe a little more active. And it is relevant in this aspect because Canyon County overall is a little bit cheaper as compared, as you can see, to Ada County. So it's a little bit more popular for people to go to, and they're willing to travel out to Meridian, willing to travel out to Boise for their work or whatever it is they need to go to make a living. So overall, Canyon County seems to draw it seems to draw more action than Ada overall, but in terms of volume, no, Ada County is, still kind of there, but you can just see the deterrence a little bit to where people want to come over to Canyon County because it's a little bit more affordable, especially to where mortgage interest rates are. It could make the difference for lower income families that are trying to purchase here in the Treasure Valley. But overall, the days on market is showing a relatively healthy status in Canyon County, as is the cancels and expireds. Again, the trend, as you can see, not a lot of cancels out there. So there is transactions moving forward, probably just being soaked up by the buyers that are coming out to be able to purchase up these homes, and sellers just reluctant to sell, which is still kind of the norm considering where mortgage interest rates are. We'll go ahead and discuss that a little bit. But we're seeing still healthy markets out here in Canyon County, according to the data. You can see expireds are kind of ticking up a little bit. So again, we still got some sellers that are really holding on to the price that they want to get. But either way, this is just going on and showing what's happening in Canyon. And of course, if you have any further questions, please feel free to reach out to me. More than happy to answer them. But hey, look at that, a subscribe button. If you like the information that you've seen so far, please hit the subscribe button below. Please feel free to share this video with somebody that might find it useful, that that might be moving here to the Treasure Valley. And of course, if you do have further questions or you are looking to buy, sell, or invest right here in the Treasure Valley, feel free to give me a call, shoot me a text, or even shoot me an email. More than happy to answer any questions. So let's go and let's talk about some big elephants. And what is the big elephant section all about? Well, it's really about, what are some things out there that could really be rocking the boat to make real estate more difficult, or if you're out there and you just think that a crash is coming that could possibly do it, or etc. Let's go ahead and address some of those things that are just happening on a national stage that could affect real estate. Well, of course, the big one is, are we going to end up in World War III? The way that things are looking right now, we are just giving money by proxy, money by proxy, money by proxy. So, but everybody in the world still has their eye on Taiwan and what China's going to do with Taiwan. Are they going to go ahead and invade Taiwan? If that does, we can almost expect inflation to go on the way back up. You can still see the Fed probably being as aggressive as they are, if not a little bit more aggressive. So it could keep the federal funds rate, where it's at, or even higher if we decide to go to war. So that is one thing that we're definitely going to have to take a look at. But also, this massive spending is not helping our case either. It's just not helping the inflation picture overall. And as we know, we just sent more billions over to the Ukraine and even over to Israel recently, or at least the Senate passed it. We'll see if it makes it past the House. But all of this spending is definitely not a good thing as well. One of the other things recently that a lot of economists are talking about is really the fudged numbers that the BLS and the BEA, so the Bureau of Labor Statistics and the Bureau of Economic Analysis, is really kind of saying when it comes to employment. They're really kind of grabbing a lot of different things. And one of the biggest things that they were grabbing was illegal immigration. So by giving them our tax dollars, etc., is basically saying that they're employed. So they're kind of being creative with those numbers to be able to raise the employment level overall, which is still kind of keeping the Fed on edge from being able to dip the federal funds rate down. Because that is one of the biggest things that they're trying to do with the broadsword of the federal funds rate, is that they are trying to cut down employment, and they haven't been able to do so. Now, we do know that they are counting like secondary jobs, tertiary jobs, jobs that, really can't qualify for a home. But again, at the same time, you got to ask yourself, is that really affecting the real estate market overall? The answer to that is really kind of no. And why? Because it's not 2008 anymore with a subprime mortgage crisis, et cetera, to where if you have a pulse, you can go in and get yourself a loan. There are really hardcore, stringent requirements that you have to jump through with a lender in order to be able to qualify for a loan if that's what you're doing. Of course, if you got cash, you're able to come out and purchase a house in itself. So people making lateral moves from, say, California to here, or Washington or Oregon or Texas, to where they got more equity and are able to roll that into a house over here. But if you are going for a loan, your debt to income ratio has to be there, et cetera, et cetera. I'm not a lender. I'm going to go ahead and say, go ahead and talk to a lender about all the requirements. And if you are looking for a lender, feel free to reach out to me. More than happy to have you sit down and talk with one, or talk with one over the phone to set that foundation to go ahead and make that home purchase. But either way, where the jobs are at, there's still people, with really good jobs, that are out there, or dual incomes, etc., maybe even multiple incomes coming in to be able to qualify for that loan and be able to get a home. So the requirements are there to where they're not putting people underwater like they did in 2008. So keep that in mind when it comes to the markets crashing as itself. Now, what about what's going on in Texas? Yeah, that's a big one. Okay, right now there is definitely a fight between what is going on with Texas and what is happening with the federal government. Biden versus Abbott, and right now Abbott is leading that charge. And there's 27 or 25 plus other states, I believe it's 27 states, including right here in Idaho, that is helping Texas be able to defend the border itself. Can that result in a potential civil war? Well, the way that things are being pushed, it very well could. So that is something definitely to pay attention to. Do I hope it does? No. I mean, who wants to see war, return to the United States, or who wants to see us go to world war? We really don't want that. That would be a nasty, nasty thing. But at the same time, could it happen? It very, very well could. And if we do end up in civil war, things can definitely change. So let's just go ahead and, kind of leave on that note, but keep it in the back of your mind that that could be something that could rear its ugly head. And then lastly, the last point I want to make is the BRICS nations. I've said this a million times over in my other videos, are the BRICS nations really pushing the de-dollarization of the world? And the answer to that question is yes, they are. They are definitely pushing on that. In fact, recently, Iraq was one to go ahead and push back against us when it comes to using the dollar in trade. That is not good. So they are picking up steam. And if we do lose our status as a world reserve currency, well, then say hello to post-World War I Germany. We're all in trouble. That would be a very, very bad thing. So these are really all scenarios that you really don't want to see happen just to get a cheaper price on a home. Okay. I'm just going to lay that out there right now. Those are very, very disastrous things for all of us. And you might think, oh, hey, it's a big win. Home prices are crashing down, but everything else is going to crash down with it, or it could crash down with it if these things happen. World War III, maybe not as bad. Inflation would go up. Civil War, that's a whole nother one. And if the BRICS nations definitely take our status as a world reserve currency, that's a dangerous, dangerous one. So we'll just have to continue to see what happens and plays out around the world. But with the presidential election right around the corner, let's just hope that good times return right here to the United States. All right, and lastly, like I always do in all of these videos, let's go ahead and let's discuss the best strategies now if you're looking to buy, sell, invest, or if you're even renting here in the Treasure Valley to be able to get to home ownership. What are some of the best strategies right now for all of you? So buyers, let's go ahead and let's start off with you. So as we saw during especially the inventory graphs, buyers, we can see that the inventory has just absolutely plummeted down. And we can see that the pending lines, okay, have started to go on the way back up, which is showing that buyers' demand is returning to the Treasure Valley. And as long as it's narrowing that gap, we can expect median home sold prices to either stabilize or we can see them going up. Now, one of the trends that we saw during 2023, if you watch these videos, is you did notice that even though that gap, hadn't really intermingled, or it was a little bit, wider than usual, median home sold prices were still on the way up. And what is the other thing that's going on right now? Mortgage interest rates. Mortgage interest rates are still fluctuating, and they're still going to fluctuate because the treasury markets are still nervous, probably until March. Now, right now, a lot of economists out there are saying that there's an 80% chance that during the March meeting, the Fed will cut the federal funds rate down for the first time. Now, the federal funds rate does not control mortgage interest rates directly. Keep that in mind. If you have any further questions about that, feel free to reach out to me. Happy to explain how it all works. But either way, once they do dip the first cut, we can expect the treasury markets to get a little bit more eased, and we can expect mortgage interest rates to come down with it. That's going to be huge because at that point, buyers are going to come out of the woodworks. And as we can see right now, that even though rates are still in the sixes, okay, about mid sixes, high sixes, buyers are still coming out of the woodworks as inventory is coming down. So right now it is showing that this right now is probably a very, very optimal time to buy because you don't want the competition coming back, and especially if inventory is going to continue to dive down because sellers are reluctant to sell. And as we can see, sellers have been reluctant to sell. They don't want to get rid of their high two, threes, or low four interest rates that they have had. Why? Why would they want to do that for to roll into a 6 or a 7, unless if they're desperate to do so? So we have noticed that trend, and you can see overall, if you look at the graphs in their entirety, please go back. You can see overall transactions have been just slipping down over the years. So again, it's just showing the reluctance from the sellers, especially since mortgage interest rates, food costs, everything else, inflation has been on the way up. They're just reluctant to do so because they're sitting comfortable where their income's at or their retirement's at, etc., and where their mortgage interest rate is. They just don't want to sell. So, anyways, buyers, but what I do see anticipating, or what I do see coming here, is if the Fed does cut the federal funds rate, the mortgage interest rates are going to come down, which is going to bring out more buyers. And if that's the case, we can have multiple offer situations returning right here in the Treasure Valley. There are some, and there were some in 2023. So keep that in mind. Do I think it's going to be a fever pitch that we saw back a couple of years ago during COVID? I'm not going to say it's going to be exactly that fever pitch. But again, I could see multiple offer situations coming up, which would just drive the prices. So we'll just have to continue to monitor the data. But one of the things that I can tell you is that the Fed does plan on cutting the federal funds rate and having the federal funds rate back down to decent levels by 2025. And in fact, they're now starting to say that the CPI and the PCEs should dip into the twos, which ought to make them very, very happy because that is their target goal. And if that's going to happen, then we're basically returning back to normal. And at that point, do you want to be kind of caught in the multiple offer situations when you can just go ahead and refi a little bit down the road? So it is kind of taking that pain for now. But again, it's just some strategies. So I do recommend that you do talk with the lender, get their advice too, as well as my advice. And if you are looking for qualified lenders out here in the Treasure Valley, feel free to reach out to me. More than happy to get you in contact with one so you can go ahead and start setting that foundation today. But buyers, if you have any further questions, please feel free to reach out to me. And I look forward to representing you in the future. All right, sellers, it's your turn. Well, sellers, if you do need to sell and you really kind of don't care where mortgage interest rates are right now, you don't mind losing, your 2, 3, or 4% wherever you're at, or you do have to make a lateral move because really it is still the time of necessity to sell. So either your job moved or your family moved or etc. And that's what's really kind of getting you out of the woodworks to go from one to the other. Because I mean, really, why would you sell where mortgage interest rates right now if you're sitting pretty? But either way, one of the things I do want to mention is that your competition is really shot out, as you can see. There's not a lot of competition out there. And as you can see, the buyers are starting to return. So this could be bringing back multiple offer situations here to the Treasure Valley. We'll just have to continue to watch, wait, and see. And you can see that the markets are still doing healthy overall. Even in Canyon County, the days on market, they're already starting to tip the other direction. We'll have to continue to watch that. That was very, very interesting to see. But either way, the buyers are out there and the buyers are saying, hey, we know where mortgage interest rates are. We're still willing to come on out. And where inventory is there, you just don't have that competition level that, like, say you had back during the market correction when the buyers completely dumped off and there was just seller after seller and you had to drop your price and drop your price and drop your price in order to get your home to sell. Those days are really kind of over from what it's looking like in the graph. I see like all the ebb and tides and all the reactions and other reactions to the swings that we had created by the pandemic have kind of more or less stabilized themselves. So could we see stabilization throughout 2024? We could, but I do expect median home sales price to be on the way back up and then take our holiday lulls like we normally do every single year. But if you are looking to sell, this is not a bad time considering where inventory is at. And again, like I said, over in the buyer's aspect, if you are making that move, the federal funds rate is anticipated to come down. When that happens, buyers are going to come out of the woodworks again. And inflation is still on its way down, hopefully hitting that 2% goal, within this year or sometime in this year to make the Fed completely happy. And then things kind of more or less return back. But if you are looking to sell, you are looking to sell your house in the quickest time possible for the most money possible in this market, please feel free to reach out to me. Love to come over, set up an appointment with you for 30 minutes, show you all these strategies and show you all the strategies I've got to be able to go ahead and sell your house in that exact process, quickest time possible and for the most money. All right, investors, it's your turn. Investors, yeah, definitely an interesting time, that we do have going on. Inventory is coming back down, buyers are coming back up. If you're looking for that secondary property, could we start seeing multiple offer situations start returning? We very well could, especially if sellers are a little bit more reluctant to do so. But if you are looking for secondary properties, one of the things that I'll say is definitely look in new construction because new construction's taken the biggest hits and they still have concessions overall. Now, not all of these subdivisions are going to be really happy that you're a second home investor, and a lot of them, some of the HOAs have restrictions on how much of the subdivisions can actually be sold out for a secondary property. So keep that in mind as we go through. If you wish to hire me as your realtor, I hope that you do. We'll definitely give these subdivisions a call and see what's going on with that. But of course, again, the more money that you can actually throw down on your loan, if you are going for a loan, is going to give you the best overall capitalization rate. Or if you're coming out and paying in cash, then absolutely 100% is your best capitalization rate that you got. So again, the more down payment that you have. But remember too that your mortgage interest rate, because it's a secondary home, is going to be a little bit higher than what you would get off of a primary loan. So you do have to factor that in. And I also will make those calculations for you if you're looking for a secondary home to be able to show you what your capitalization rate is going to look like over the long term. But either way, as we are seeing here, the buyers are starting to come back. Inventory is starting to come back down. This could be a really, really good time to get in there, get your secondary home, get the equity that's going to come out of 2024, which I think could be anywhere from 5 to 15% overall. And then start, of course, putting away in your reserve study for repairs down the road. And you can be sitting pretty. Right now, rents here in the Treasure Valley are still kind of on the way back up. They are. And that is just the reality of what is happening here in the Treasure Valley. But either way, if you are looking to invest out here in secondary properties, please feel free to reach out to me. More than happy to discuss this game plan with you and discuss your potential secondary rental property. So I look forward to hearing from you. And of course, last but not least, renters, it's your turn. Renters, I say this all the time, you are paying 100% interest. Why? Because you're paying your landlord to pay for their equity. So they've gotten that 5%, in Ada County, and they've gotten that 1.313% in Canyon County that you didn't get for this overall year. So they ended up getting that. And on top of that, as you can see, rents, they're just going up. So home ownership is becoming affordable in aspects as the mortgage interest rates start coming down, which they have been fluctuating. I know, but once the Fed starts making that first cut, guarantee the treasury markets are going to start feeling a little bit more comfortable, not as defensive, and mortgage interest rates will start coming down. But again, inventory is low, buyers are restarting to return, so you could have competition there. So if you are renting, you are thinking about homeownership, this is a good time to start talking to a lender and start building the foundation, at least, of a home purchase for when you feel comfortable and ready. Of course, feel free to reach out to me. Stay in touch with me too. I will let you know and show you what's going on with the markets, especially if you stay in tune to these videos. So please subscribe to these videos down below, and please continue to follow me. And if you have any further questions and you are looking to start this process, feel free to reach out to me, shoot me a text, send me an email. Be more than happy to discuss this with you and get you on the path to home ownership. All right, and as always, thank you again very much, everybody, for taking the time out of your day to watch these usually very, very lengthy videos. And of course, if you have any further questions or you are looking to buy, sell, or invest in real estate right here in the Treasure Valley, please feel free to give me a call, shoot me a text, send me an email. Also, please feel free to subscribe down below so you're constantly in tune with the videos that I do come up with. And please feel free to share this with anyone that you know that is looking to make a move right here to the greater Boise, Idaho area, better known as the Treasure Valley. I look forward to hearing from you. But of course, as usual, God bless. I look forward to the day that we speak. I look forward to the day I call you my neighbor. Until then, thank you so much. Bye-bye.